Let's start with gold. And I want to get, I should just say, from an overriding standpoint, you see the trend on gold is down. We see the US dollar, I know, is moving up. But most people would say, isn't gold supposed to be one of your safe havens during times like this? Why isn't it?
Well, I think, it's probably inaccurate to say that gold hasn't been a safe haven. When you look at gold and compare it to risk assets, almost of every variety, even if you look at long duration bonds, gold has done pretty well. Yes, it's not at the record level, but for the most part, it has held up not too badly. Even today, after the Federal Reserve told the market that they're going to be somewhat more hawkish than we were pricing, gold initially went up and down. Now I think we're at around 1670 level or so. Could have changed by the time I got here, but at the end of the day, gold has done okay. We do expect gold to trend somewhat lower, and the argument goes as such. Well, we're going to have on the long end of the curve pretty significant increases, probably with the terminal rate going all the way up to 4.6%, as suggested by the dot plots, as you mentioned earlier. And at the same time, inflationary expectations will likely moderate, particularly on the short end of the curve as well, as these policies tighten up. And that also ultimately means that real interest rate, which I think is the biggest driver of gold, will serve as a negative. So the opportunity cost of holding this stuff grows as interest rates go up, because you can buy other instruments, whether it be credit, whether it be bonds that are yielding a significant yield. And gold, for most investors anyway, is a zero yielding asset, and it's expensive to carry. So you might substitute higher yielding assets for gold. And I think that's at the root of the explanation. And of course, the US dollar is quite high as well.
Yeah, which is driven by all those factors you just said as well, too. 1675 right now is where gold is today. So when you look out 6 months, a year from now, I don't know if you look out that far officially in your forecasts, what do you see?
We do. We look out several years ahead. That's pretty brave, because forecasting, especially the future, is hard.
And the further in the future, the harder it gets.
The harder it gets. But I think over the next few months, it wouldn't be unreasonable to see gold at below 1600. Mid 1600s would probably make sense. There's certainly a risk for that. That's something that we're looking at. We're not fully convinced quite yet, and I think we might stay at the lows for a while. But as the economy slows down, inflationary pressures abate, and with some luck, we'll see a lot of those logistical issues and supply chain problems moderate. I think the market is going to get ready for the Federal Reserve to not be as tight. Of course, they're signaling to us right now that they are, quite ready to be very restrictive and stay there for a prolonged period. But of course, if you recall, not that long ago, they were ready to stay accommodative for a very long time. And things can turn very quickly if economic conditions permit. And we suspect that as we move deeper into 2013, perhaps the third quarter, maybe at the latter part of the year, monetary conditions will start loosening up. And gold would tend to observe that, gold traders anyway, and act well ahead of that. So, yeah, I think there's a downside, but I think there's a fairly decent future for gold. And I wouldn't be at all surprised, in the next few years if gold tests new highs. And that's mainly because my suspicion is that the 2% target is a target, but I think we'll probably 2%
have 2% inflation target.
Inflation, that's right. We most likely have higher inflation to target for a prolonged period, and perhaps not as tight monetary policy, meaning that real rates will be somewhat easier than they were in previous cycles. And that's good news for gold long term. But let's be clear. That may not happen for a year and a half, or not longer. This is a long-term scenario, so I wouldn't exactly sell at the lows, but perhaps not a good idea to load up right now.
Yeah, and the other thing I guess too is whatever from what you're describing, what's going to have gold turn to be more positive is also what's going to help turn, I would expect, equities and a whole lot of other things. Like looser monetary policy is the fuel for everything.
Yeah, I mean these correlations tend to trend towards one, and we've always maintained, as a view that it's not so much about inflation or anything else. It's really how monetary authorities respond to inflation.
Right.
And I think that's the key here. And for the most part, many assets react to that.